The housing market statistics for Okaloosa County for the month of November 2022 are in. I'll go over those and we'll dig into property insurance, what the Florida Legislature is doing to keep pricing in check, and what some homeowners are doing to keep insurance costs down. The median sales price for single-family homes in Okaloosa County in November was $339,325. That's down about $3,000 from the previous month, but up more than $26,000 from November a year ago. The median sales price for condos and townhomes was $545,000. That's up $64,000 from just the previous month, and from last year, November, that's up $15,000. Median time to contract, or days on market as we call it, for single-family homes in November was 25 days. That's 4 more days than the previous month, and last year, November, it was only 11 days on market. Condos and townhomes spent 53 days on market. That's 7 more days than the previous month, and a year ago in November, days on market was only 12 days. New listings. There were 309 new listings for single-family homes in November. That's 34 more than the previous month, and last year, November, there were 420 new listings. For condos and townhomes, there were 87 new listings in November. That's 13 more than the previous month and only 1 less than a year ago November. There were 879 active listings for single-family homes in November. That's a 2-month supply. That's over twice as much as a year ago in November, when there were 431 active listings, leaving us with just under 1 month's supply. There were 368 active listings for condos and townhomes. That's over a 3.5 months supply. And a year ago, November, there were 239 active listings. That would be about a 2-month supply. Florida property insurance, what has changed? Florida lawmakers finalized 3 bills that, among other things, eliminate one-way attorney fees, do away with assignment of benefit options, and further depopulate Citizens Insurance. Andy Gonzalez, the Florida Realtor's Vice President of Public Policy, stated that if you had to sum up the major outcomes of the insurance reform bill in a single sentence, it would indicate that the bill will curb massive amounts of lawsuits that are driving up premiums, stabilize reinsurance coverage, and shrink the state-backed Citizens Property Insurance Corporation. Insurance industry experts have long blamed lawsuits for driving up costs that lead to financial losses and higher homeowner premiums. The chief driver of lawsuits is a provision known as one-way attorney fees in property insurance cases. One-way attorney fees allow the plaintiff, the policyholder, to recover attorney fees, but not the defendant, the insurer. The practice incentivized unwarranted litigation. And there's a new temporary reinsurance program. The cost for reinsurance, essentially insurance for the insurers that kick into gear following major post-disaster losses, has risen, and those higher costs are baked into the rates homeowners pay. Property insurers generally buy reinsurance coverage on the private market and from the Florida Hurricane Relief Fund, a state program. The bill adds additional levels known as layers of reinsurance funded through $1 billion from the state and premiums paid by insurers. They are also making efforts to depopulate Citizens. Citizens Property Insurance, the Florida-operated insurance of last resort, more than doubled in size during the past 2 years and now has 1.13 million policies. The large number of policies, the greater the risk faced by Florida taxpayers after a disaster. The bill includes new or boosted ways to move homeowners with Citizens policies back into the private market. For example, Citizens policyholders now cannot renew their coverage if they receive private insurer coverage offers within 20% of Citizens' premium costs. The bill also phases in a requirement that Citizens customers buy flood insurance, which is not included in other homeowners' policies. What are homeowners doing to reduce their insurance costs? Some are nixing it altogether. The state has no regulations mandating homeowners to carry insurance. Mortgage lenders do require homeowners insurance, including windstorm coverage, and for homes located in designated flood zones, separate policies to cover damage from inundation. People can legally go without insurance if they buy their homes with cash or own them outright by paying off their home loans. That does not mean it's a good idea, though. Few people would recover in a situation where their home was totally destroyed and could completely go through their savings and have to borrow money to fully recover. The Insurance Information Institute estimated that 13% of all homeowners in the state don't carry property insurance, nearly double the national average of 7%. As policy costs continue to rise, that number could go quite a bit higher, experts and officials fear. Homeowners insurance typically runs between $4,000 and $5,000 a year for single-family homes in Florida. Coverage for a condo is somewhat short of that. The additional cost for flood insurance varies widely from hundreds of dollars to several thousand. Often those who forego property insurance are low-income individuals that inherit a mortgage-free family home and choose to skip coverage. The very wealthiest can afford to go bare and rebuild if disaster strikes. But lower-income homeowners who choose to forego insurance because they can't afford it are also the most vulnerable to losing everything in the event of a disaster and are unable to rebuild. Many of them live in mobile homes or older houses or condos that may have been built under older building codes and are in need of repairs and thus more susceptible to damage, experts say. What can homeowners do to keep insurance costs to a minimum? One thing would be to get multiple quotes and make sure you are taking into account the coverage and limits of each policy. Bundling different policies for homeowners and autos insurance with the same agent or company can also save some money on premiums. So can home improvements for storm and hazard mitigation like burglar and fire alarms, hurricane-resistant windows and doors, including garage doors. Experts also urged homeowners to take the highest deductible their insurer allows, which can save significantly on premiums. But be aware that that will leave you holding the bag for damage and losses that could range well into the tens of thousands of dollars, so first be sure you can afford to cover that out of pocket. If you have any questions about netting the most money possible for your property, feel free to reach out. Thanks for watching.